Hi everyone, today I'm doing 3 UK stocks to buy in June 2020. This is my most popular UK stock video that I do on the channel. And as always, if you could smash that like button to help the YouTube algorithm, that would be absolutely amazing. And we get into the 3 stocks that I'm looking to buy in June 2020. So number 1 is the stock that I'm definitely looking to buy. The other 2 I might add in if the price dips a little bit more. But definitely I'll be adding into this one this week, and this one is called Dark Group. Now this one is better known as Jet2 or Jet2 Holidays, and this is kind of like my aeroplane play with a lot of airline stocks that are on massive discounts because of the restrictions of travel. People that are looking to go on holiday can't really do it now because of the CV that's kind of broken out, but a lot of these stocks are on massive discounts and they offer a bit of risk but some reward, and it's really important that you look into these and see which companies are going to do really well after all this has passed. And Dark Group or Jet2 Holidays is my kind of stock market play in this industry. So Dark Group is currently down 65%, and it was down a little bit more than this actually. And I do own some shares, but it's a stock that I'm more willing to buy now because I think we're kind of getting towards the back end of the CV. Now I like this one because it has a great reputation. I don't really see many people trash talking like Jet2. I use them and I think they're fantastic, and they've got a great reputation and they've got a great brand. So with a great reputation you have a lot more people willing to travel with them. I certainly have never seen an empty Jet2 plane before, and because of the brand and the marketing, they've had an explosion of people wanting to travel with them, and this has led to massive revenue and EPS growth. Now because of them doing really well, and when you look at other airline companies like Thomas Cook who have really struggled and it has led to them collapsing, and Jet2 are definitely going to be capitalising on this, and potentially going forward there might be even other companies that might collapse that aren't run really well, like how Jet2 is run, perfect. Jet2 in a position definitely to capitalise on this when everything gets back to normal. We've seen the other day that Virgin were on about that they're struggling as well. Now previously Jet2 pulled in fantastic profit, some fantastic revenue growth, and they're probably going to carry on this after the CV. And when you look into a lot of airlines, a lot of their profit don't increase. When you look at the bottom line of Jet2, their profit has grown absolutely huge. So it's a credit to Jet2 as one of the only airline companies that actually increased the profit. Absolutely huge. So that's a brilliant thing. With Dark Group or Jet2, they've got 1.7 billion in cash and 980 million in debt. Obviously this might change a little bit after the CV. They might have a little bit less cash and a little bit more debt, but they went into this scenario with a decent balance sheet. Double cash to debt just about is a fantastic thing to go into this situation where a lot of other companies weren't in such a good position. So obviously they were paying a little bit of a dividend as well. Obviously that's cut because they're not operating, but when you're looking at airline companies, you want to be buying a company that has profit growth, which Jet2 have, and you want one with a good balance sheet. And that's why I bought this one, because you look at a lot of airlines and the profit making was flat. A lot of the balance sheets were pretty ugly. So with this one, it's a perfect airline play in my opinion. And I think with this one, I am expecting at least to get a 100% return on this one, and it will be a stock that I am looking to add into this week. Number 2 is Greggs, which I've talked about a lot on the channel, so I won't spend too long on it, but it's a stock that I've been buying really heavy. I might buy a little bit more if it's at the right prices, but like I say, I think it's a great company, and if it is on a little bit more of a discount, I might just buy a little bit more, a couple of shares, but it's a company that I was buying heavy only a few weeks ago. Now with Greggs, you have a massive EPS gain, a massive revenue gain. They forecast to do really well, and this is proven in past performance as well. It's a company with a fantastic balance sheet. There's no debt on that balance sheet, which is great. Insiders are buying, so the CEO, which has done a fantastic job with Greggs over the last 8 years, is actually buying shares in this company. So that's always a really positive sign. And with this company, what you're going to see is you're going to see stores opening back up soon, which is going to be great because then it'll start operating, might get to that dividend again. He's also look at opening up some more stores through the next few years, which should increase that EPS and revenue. It's got its own deal now with delivery for Just Eat, so that should help sales as well. And also it is working on its own supply chain, which will then allow it to open up more stores. As well as that, it's going to lead to better profit margins. And if it has better profit margins, that's going to mean that Greggs are going to have more money from what they already have right now. With that more money, it can lead to them even expanding even quicker, or it could lead to them increasing that dividend that they do pay. So this supply chain will be massive for Greggs, and I think over the next 2 to 3 years, it's going to be a fantastic company, and it's another company that I am expecting to make over 100% gain on this one. So I love Greggs. It's a 5-star company in my opinion. And like I say, I'm not really planning to buy too much more, but if the price is right in June, it's another stock that I would just add a little bit more of. And number 3 is Hollywood Ball, which is a company that I made a full video of about a week ago, 2 weeks ago. So if you want a full video on Hollywood Ball, go check it out. But same again, this is a company that's been down absolutely huge because of the coronavirus and not being able to operate. But it's a company that I see massive upside. I see in 2 to 5 years, this company at least going up another 100%. So it's a company that I really like. And if the price is right, I'll definitely be buying a few more shares in Hollywood Ball. So Hollywood Ball has really good EPS and revenue growth, and previously as well it's had good EPS and revenue growth. It's a company that has a good balance sheet. Its cash is equal to about its debt as of the end of the year pre-coronavirus. Insiders wise, there's a lot of people starting to buy this company because of how low it is right now, and how this company is going to make more money, which will lead to that share price going up, is by opening up more centres. So it currently has about 60 centres right now, which are kind of being refurbished, and it's looking to add about another 10 centres, which will then obviously increase the EPS and revenue. And also what Hollywood Ball has done really well is it has diverse that revenue. So originally a lot of that revenue came from bowling, but now bowling only makes up about 50% of the revenue in Hollywood Ball. It makes another 25% from the bar, and it also makes another 25% from the arcade. Now the coronavirus might hurt the arcade, but with the bar, in the bar I reckon everything's about 2 meters apart, so they should be able to operate the bar quite easily. Bowling wise, same again, I think bowling alleys, they're probably about 2 meters apart from each other, so you'll be able to social distance there. So I see bowling or Hollywood Ball being able to operate pretty similar to what they were doing before, and I see a demand for them when they open up. I think there'll be a demand for people wanting to go there. So I really like this company, and I think it'll do really well after the coronavirus outbreak, and I think it offers that great EPS and revenue growth. You'll be able to pick up that dividend, and with them new centres opening, it'll only add to the EPS and revenue side of it. So it's for me a company I really like, and if it's the right prices, I'll nibble a little bit more in June because I really like this company and I think it'll do really well. So those are my 3 UK stocks to buy in June 2020. I hope you enjoyed the video, guys. As always, if you smash that like button, that'd be absolutely amazing. Subscribe if you haven't, and I'll see you on the next one.